Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. If you pick up the phone and give us a call, we're not going to answer. How about that? We're going to save that call. We're going to call you back later. Reason for that is the show is kind of in a flow situation. Most times we have guests on the show, and most of the things that I talk about are interesting in terms of the overall market, what's going on in terms of the real estate market or the mortgage market or anything else in terms of how it affects you in your decisions on whether you're going to buy, whether you're going to sell, what kind of rate you're going to get on your mortgage, all the things that you need to know and learn about concerning your mortgage. So if you have questions, write them down and call me later. This phone number is always available and always toll free. So 888-713-2929 to get your questions asked. By the way, we do get questions all the time via email as well, info@malibufunding.net. The company website is malibufunding.net, www.malibufunding.net. And of course, we're on YouTube. Go to my real estate channel, which is Jeff Barton, the Real Estate Voice, and you'll catch me. I have a Twitter following at Jeff6493, and those particular ways to get in touch with me are all about trying to figure out the best way to reach you. You're the customer. You're the one who needs help. You're the one who's probably shopping. If you are smart, you're shopping. If you're not smart, you're just going with the first person, which is fine if it's us, because we're a pretty reputable company. We have about 50, 60 loan officers, real estate agents in 10 different states. Malibu Funding, Inc. is the company I work for. They sponsored the show, and I'm really happy that we've been on air now almost 6 years. How many shows have we done with you, Daryl?
This would be show number 131.
131, and before that we had Desiree, which was our other engineer doing the show. I think she did 50 or 60 shows anyway. So I know for a fact that there is useful information in all of that. But topical, what we're going to talk about today is we have a couple of people. One guy from Illinois who is a loan officer who's going to talk about loans there and how his business is. Another gal from North Carolina who's going to talk to us about how loan business is there. By the way, they both work for Malibu Funding, Pete Rigger in Illinois and Maggie Miller out in North Carolina. Both of these people have licenses as well in California, and that's a good thing. So if you do have questions or you like what they have to say or anything you see on the show, make sure you get back in touch with us. Thomas Trujillo from LoanStream is going to round out the guests today, and he's going to talk a lot about non-QM type loans and other such loans that LoanStream has done. We've done a lot of business with LoanStream this year, and I think it's an interesting market. Let me just tell you where I am and where the company is, as well as the overall market and how I see it. Okay, have you ever run a marathon? Daryl, you ever run a marathon yourself?
Oh, 1 mile.
1 mile, okay. So 1 out of 26. So at the end, and we've talked this analogy before, but I bring it up again because it's important to understand the industry that you are either shopping in or about ready to do a loan or in the business with. The loan business has never been better. Let me repeat. The loan business has never been better. So the analogy, when you run a race, especially a long race, I ran a race last week. It was supposed to be an extremely long, what they call an ultra race, 31 miles, right? And it was in mountainous terrain in 100-plus degree weather. Well, of course I didn't finish. I'm an old guy and I can't do it. My friend did. But like the business, now, when we started getting really busy in the loan business was 2010, and it is almost 10 years later, maybe more, that we've been extremely busy, really busy. And like this 31-miler in the heat, that's where we are today. The rates, and anybody notice the rates? Unbelievable. They are down lower than they were in the past 3 years, as low as they've been in the past 3 years. But that usually energizes the entire industry, which it has, which means that there's a lot of loans being refinanced. Had a call today from an ex-client of mine wondering about whether they should do a refinance or not. And we talked through it. I think I talked about it last week. The amount of interest that he had already paid into the loan was a lot. It was almost $100,000. So how long is it going to take you to recoup that? So he calls me today after I gave him that pitch last week, meaning that it might take you 10, 15 years to recoup that $95,000 before you start seeing the benefits. At that time, you will be paying mostly principal anyway, so is it really worth it? Well, he called me back today and he said, I'm involved with this remodel of my house. I'm putting new floors in, new kitchen, maybe I want to refinance in order to lower my payment. I said, well, that's a different story. If you're looking for benefit to yourself, regardless of the $95,000 already out the window, and you're saying, if I can take $50,000 out and pay for this remodel, at the same time lowering my monthly interest rate, meaning that my payments are lower, then it's worth it to me. And that is a tangible benefit. One of the tests at any loan is if you're refining, you have to have a reason. And the reason is called net tangible benefit. In his case, yes, the net tangible benefit is worth it to him. So one of my tremendous guys who's been on the show several times, Luke Mankey, is going to talk to him about it, and hopefully they'll work something out to the benefit of my client. But at the end of a long race, which is where I consider we are, a lot of people in the industry are tired. We went through this exact same thing that ended, of course, in 2007, 2008, and we were around for all that. I don't compare this to that, except that the way loan officers, real estate agents, people in the business, whether they be title or escrow or home inspectors or anybody else, the way they are right now is after being 10 years into this and now getting this lowered interest rate when we thought we would be slowing down. We're not slowing down. The rates are so low right now that anybody who did a loan in the last 18 months to 2 years has a net tangible benefit to redo that loan. For you, 2 years of interest payments, heck, you're going to make that up in, 17, 18 months. So it is worth it for you to do it, to lower your payment. You can go from a 4.25 to a 3.5. That's almost a full point if you have a conventional 30-year fixed rate mortgage. That is unbelievable. Or let's say you have an FHA loan right now that you want to refinance. They call that a rate and term. You could bring it from a 3.875 down to a 3.6, almost a quarter point to a half point. That's pretty good. And when you consider that the industry is worn out, tired, the only thing that's in your benefit is the rates just got lowered that energized everybody once again. It's like in endurance races, and I do a lot of them, you get this second wind. Well, after 10 years in the business, I can tell you that the second wind in the business has hit. And people who were tired, who were like worn out at the end of the race, well, they're right now ready to work for you. Whether it's Malibu Funding, whether it's any number of brokerages or lenders or mortgage bankers, or go down to your local bank and see what they can do for you. Because everybody knows in the business that when rates rise, business slows down. The only thing that saves the mortgage business is when rates get lowered. Now, we talked last week about the inverted yield curve from the 10-year note to the 2-year note, i.e. the 2-year note, and this is what controls the mortgage interest rates. We said that a lot of why the 10-year note yield has fallen to I think it was 1.66% last week, I didn't check it this morning, was because of foreign investment money coming in because of the instability around the world, especially in countries like Germany and Hong Kong, especially because of what's happening with their particular civil unrest with the mainland government. All of this money flowing into the markets, flowing into treasuries, caused the yield curve to invert. Well, today it's back upright, and the 2-year is paying less than the 10-year, which is where it should be. It's something to consider. It's something to watch. But right now, rates are terrific. Get back in the market. We're back energized and we can help you. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, you're not going to get us. But what you will get is a voicemail. And when you leave a voicemail question for me, I will call you right back. The reason we have it like that is because sometimes writing the phone number down, taking assessment of the show, what we talk about, questions come up, and you just write them down, because we cover a lot of information, a lot of different topics, whether it's national, local, whether it's programs, whether it's real estate. There's so much to talk about in this short hour that we have each and every week. That's why we do it like that. info@malibufunding.net, that's our email address. And of course, we have YouTube, we have Twitter. I've got a blog called bartonblog.com, although it's kind of down right now, but it will be up again, once again, very soon. We bring to the show new people all the time. And Malibu Funding, the company that I work for and sponsors this show, they have offices all over the country. And one of the great things about that is I get to talk to brokers and real estate agents and loan officers who work in different locales and brings perspective to the show. That is the case once again. Pete Rigger is with us from Illinois, and I really appreciate him coming on the show. He's new to Malibu Funding and also new to the show. Pete, how are you?
I'm well, Jeff. Thanks for having me.
Thank you very much. Can you just describe to the audience what the weather is like right there now? Now, I know Chicago, and I know how hot it is, but it can't be any hotter than out here. What's happening with the weather there?
Well, Jeff, I'm glad you mentioned that. This time of year we start transitioning out of the searing summer heat and into the 70s, which over the course of the year does lend to a bit of seasonality in the real estate market. But today we're at 80, I believe 82 and sunny today.
Oh, that's not bad at all. We're at 107 and blistering. I hate Southern California in the fall. It's just so hard. All right, let's get to the seriousness of why I wanted to have you on the show. Can you just tell people what area you work in and how long you've been in the business, just so I can get a bit more information out to the audience who's listening?
Well, fantastic, Jeff. I've been I have been originating mortgages. It's 2019 now, so around 15 years now. And as you said, I'm new to Malibu Funding. One of the areas that really gets my motor running is helping the new purchaser get into their first home. A little bit of background about myself. I know and love Southern California a little bit. I've got family out that direction. But I was also in the Marine Corps, so MCRD San Diego, Camp Pendleton, 29 Palms. I've been all around those bases, and as a result, one of my favorite things to do is to get the new veteran into his or her first home.
Tell us a little bit about that VA loan. I know there are some requirements for it, whether it's the upfront, what do they call it? There's a form that the veterans fill out. What is that called?
The
certificate of eligibility, something like that.
Yeah. Well, first of all, there's an eligibility that is required. First of all, you have to prove that you are in fact eligible.
Right.
By means of your DD 214, which you send off to the VA. And that shows the nature of your service, whether you served for a long enough time, and then you'll get a certificate of eligibility back from the VA, typically a form 261880, I believe. Yes, that's your certificate of eligibility. I can't believe I remember the number.
Wow, that's pretty good, man. That's military training really gets to you after wow, that's. I couldn't remember my phone number, let alone, thank God it's on the phone. Sheesh.
Absolutely, Jeff. Certain things do stick with you.
Hey, listen, what are the rates typically for a VA loan, and what kind is it? A 50% loan, 100% loan? What kind of? Tell us a little bit about that.
Well, one of the wonderful things about the VA loan is that it is a 100% loan. In other words,
I see.
The veteran can borrow it to purchase a home without a down payment. And rates are actually really nice. Let me see if I can't find it over here.
I've got some VA rates here, average in America today at about 3.25% to 3.5%.
And that sounds about right. Yeah,
Right.
3.25% is what I'm showing.
Wow.
Average for a 15-year, slightly higher than that for a 30-year.
Oh, I see. Wow, that's pretty amazing, right? I mean, those rates haven't been that way for at least maybe 2, maybe 3 years.
Absolutely. We've been fortunate this year that the rate environment has been favorable for the veteran, and I think it's just great for all the other veterans that are just getting into home ownership.
Now, do you need credit score, or is there a down payment? No, you said no down payment, but is there a fee or a funding fee or something?
Absolutely. There's a funding fee that is based upon the nature of your service.
I see.
For one. Meaning, if you were a reservist, you might pay a slightly higher funding fee than someone who was full-time like myself. Secondly, if you had in the past had a VA loan, you might pay a slightly higher fee than if this is your first time getting into home ownership.
I see.
And what the funding fee is it enables to have this program available for future veterans.
That's excellent. And what we talked about rates. We talked about FICO score. Do you need a particular type of FICO score? Do you have to have like 700 FICO score? Can it be lower?
Well, typically. It varies by the lender, and I know over at Malibu we have a number of lenders available to us, but typically you're looking at around 620 being a common requirement.
I see. Okay, so that's not terrible, but it's not great either, right? It's kind of right in the middle of what I would consider FICO scores in today's market.
That's correct. So it's not a super high bar to cross, but around the middle of the road, as you said.
What do you like about doing loans? I mean, you said the first-time home buyers, getting them into a house. What's the feeling you get once they, hey, we got the loan? I mean, I know what it is for me, but tell the audience about what it's like for you.
Well, for me, my basic concept of business is two things. Number one, making a connection with the person on the other end of the phone or across the kitchen table. Mm-hmm. That's so vitally important because that's what business is all about, making that connection. But then the second part of it for me is providing value to that person. Okay, and,
right.
We might get compensated as loan originators for Malibu, but the reward to the homeowner comes back to them many times over the time that they've owned that home. So in effect, we are the key that unlocks the door to home ownership, and I love being part of that. I
agree with you. I think that's the main reason I do this job. I know, and I was speaking about earlier in a segment, we're at the long end of a 10-year run here. Mortgages have been a great business, and it's tremendous business now because the rates have been lowered. But during that entire time, the main motivation is, hey, I can help people get into a house.
Correct.
So
correct, and that's one of the things that gets my motor running as well.
Right. Okay, we have about a minute left. What do you see as the market there in Chicago, real estate-wise? Do you see that the market is ascending or descending in terms of cost, price, everything else?
Well, you made mention of one factor that right at the top of our talk is the climate here.
Right.
Kids are back in school, and
right.
we will be getting into fall, and then Shiberia will descend upon us at some point. Folks simply, it's true, Jeff. Folks just don't like to move when you got a foot of snow under your feet.
No,
So there is a degree of I didn't mean to cut you off there, Jeff.
No, that's all
There is
right.
a
Go
degree
ahead.
of seasonality
Yeah.
that we're in. We're ending our so-called high season here, and then it tends to slow down a little bit in the wintertime. But what we do see is that there is a little bit more affordability here in Chicago than in other parts of the country, and we do forecast that 2020 is really going to be a great time for folks to buy. It's a great time to buy now, what with the rate environment and the availability of houses and units in our city.
Pete, thanks very much for coming on the show. We're up against the clock. I have another guest coming on very soon, but I do appreciate this, and I'd love to return and have more conversations about what's going on in Chicago. Thanks very much.
Great, Jeff. Thanks for having me.
And that's Pete Rigger from Malibu Funding out in Chicago, Illinois. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Telephone number. Write it down. Think up questions. Call me. Leave a message. Call you right back. Reason is that the program gets busy. We have many interviews. We try to answer questions that we've received online. info@malibufunding.net. Through YouTube. If you go to YouTube, Jeff Barton, the real estate voice, that's my YouTube channel, and any other source at Jeff6493, that's my Twitter handle. We get a lot of different ways that we receive information, questions, and we provide you in the same vein. So if you email me, I'll email you back. If you send something through video, I will video you back. And if you use the Twitter, which a lot of people do, I will certainly tweet out something to you that is both useful. Oh, by the way, we're on Instagram too. And okay. So we are dealing with a terrific market right now. Rates have really fallen heartily, and I think anybody who's out there who needs a loan is going to find their borrowing power has increased. With us again from North Carolina, right before the hurricane hits, is Maggie Miller. Maggie, how are you?
I'm good, Jeff. How are you?
I'm okay, thank you very much, and I appreciate you putting us on and into your schedule today. The reason being is that I know when weather turns foul, especially in hurricane season, it can be a little scary. You okay out there?
I'm good. Yes, I am. I'm actually really great. It's actually beautiful today. Absolutely stunning. Beautiful, beautiful.
Okay, excellent. Now, also, you have moved recently, so you have some information maybe about some of the ins and outs of obtaining a loan and moving and some of the other things that a lot of people experience this time of year. Give us some of your experiences about your latest endeavor, and then maybe some of the programs you might offer or think might be available for people who are doing the same.
Well, basically, from us, we actually bought our first home pretty much off the internet. It was one of those things where the first home we bought, we had to back out of because our house hadn't sold in California, et cetera.
Right.
So we bought this house. It was not our dream home by any means. It was more designed for the family actually who purchased it, who actually turned out to be wonderful, and they're utilizing the property for just what it is. And it's a family affair, truly. I mean, they truly are going to build a second home. When they did the loan, it was quite little time-consuming, a little bit keeping on your toes, shall I say, because how they wanted to do it here was take that 13 acres and subdivide 3 of it off. So the lender who actually did that particular loan, which can be done, and there's a lot of land out here, as you know. So This particular loan, instead of going back after they close the loan and have to refinance and split off, they were able to handle it through us being so cooperative and take off and re-subdivide 3 of those acres for the parents to buy, from them and not have to encumber a whole new loan and all that stuff. So it was a bit challenging, but it got done. At the end of the day, there are various programs that will do this. I'll tell you, financing here in North Carolina, and of course I still do a lot of California, but the North Carolina laws are definitely different.
Right.
Their title is everything here. That's all I can say, especially when you're dealing with land. So we decided to give up so much land and have a little bit more into a town, which is actually very booming. We're just right outside of Charlotte. We're 10 minutes away from Charlotte.
Yeah, my niece
but
lives
it's still
there.
a small,
Yeah.
smaller town.
Yeah, no, I like
Yeah.
Charlotte a lot, and like you say, it's booming and it's a city. So obviously, you're going to sacrifice being in closer into a city for the land that you had on your other place.
Correct. And it was a bit of a sacrifice because it was one of these things where I had to board my horses, but I'm also 2 blocks away now from our daughter and our grandson.
Oh,
so
nice.
it's definitely more convenient for her being a school teacher, and just try to make everybody happy. And we're actually in a subdivision, but we're the last home before it turns into what they call Rocky River Crossing, and you got the HOA. We're not in that HOA. We actually are not even in the within the city limits. We're in the county limits. So we and our next door neighbor strictly have certain things we don't have to abide by, which we do anyways. But I'm just saying, and it's quite nice actually for your price. I mean, I'll tell you flat out, we got a beautiful custom home. I mean, it's beautiful, all brick on an acre for $380.
Wow. Wow, that's
And it's beautiful.
You don't get that in California.
No, our home here that we're in now would definitely, without a doubt, cost $800,000-900,000 each.
Right.
You know, it's just the difference. But we are just right. I don't want to be in Charlotte because it's very, it's more of business type stuff. But I'm literally like hop in the car 10 minutes away and I'm there.
Wow.
It's programs here are pretty much the same like they are in California, but, they deal with a little bit more properties that have land, obviously. So there's a little bit difference when it comes to that. But the financing in California, same thing. For my particular financing, we put a lot down. So I just went with your standard Fannie, Freddie. In fact, I got what they call an appraisal waiver. And I want to interject on that real quick.
Okay.
I've been seeing a lot of those. I actually am doing a purchase right now in California, and she got an appraisal waiver. The only thing is we don't know we get that appraisal waiver till after the lender allows us to. They run what they call it's a Freddie Mac program.
Right.
So the appraisal waiver is really a good thing. Obviously, it saves the consumer money, and it's really up to when the underwriter runs the program to decide what that program tells us whether or not it's going to be a waiver or not. And it's generally based upon the down payment and credit, et cetera, for the most part.
Now, in loans like that, Maggie, so you have no idea whether they're going to give you that waiver, and how does that work?
No, and see that's a little bit of the frustrating part. But our processor actually is working on that because what it is the lenders only allow us to run what they call DU, which is the Fannie Mae Desktop Underwriter Loan Prospector. But they don't allow us to run the Loan Prospector. The Loan Prospector, which is LP, is the one that's generally saying, this loan you could do appraisal waiver on it, and we don't know till we actually get in there.
I see it, and that's a Freddie Mac product, right? LP.
Correct.
Right.
Mm-hmm. I've been seeing a lot of those, Jeff. In fact, like I said on this one, she just got one. Again, she's putting almost $200,000 down. So it's a one of those people that have a big chunk of change that are putting down on the property, and it's really a no-brainer.
So let me ask you a question about some of the California deals that you're currently doing. Market-wise, we see multiple offers. The prices have maintained steady, if not gone up, and the real estate being what it is, because of the fact that we've got lower interest rates than we had at the beginning of the year, are you finding that most of these waivers are coming now versus the beginning of the year because obviously prices are going up?
Absolutely.
Right.
I'm glad you brought that up.
Right.
Absolutely. I have seen more waivers now. I've had, Jeff, just in the last 4 or 5 deals I've done, out of those, I'd say 3 of them have been waivers.
Wow.
3 or 4 of them.
And that's a big savings. That's $600-700.
Absolutely.
Right?
Yep.
And that's a direct cost to the borrower.
Yeah. So this is how I'm looking at it now. Because this last one is a purchase. It's just going to be going to docs. She paid for an appraisal. We got an appraisal. Came in, obviously, on sales price, et cetera. But if I know going in that consumer is putting a hefty down payment and there's kind of an idea that we might get a waiver, I would just as soon hold off for a few days because my lenders are really fast on approvals.
Right.
Who I work with. I would just as soon hold off and not order that appraisal until, if I know, because I kind of got a gist. You can kind of tell if it may or may not get a waiver. It may not always, but I've seen way more than I ever have in all my years.
That's great. That's great news and great savings for the borrowers. How do people get in touch with you, Maggie, if they want to use you here in California?
805-527-5877.
And that's a local number, right? That's a Ventura County number?
Yep, and it ports right on over to my 704, but I'm all over.
Yeah, no, absolutely, and quite an asset to Malibu Funding, the company, have been for years now. How long have you worked with Malibu Funding?
What, about 15 years, something like that?
Yeah, a long time. I know. It's really amazing. And your husband is in the appraisal business still, or what's he doing?
Yeah. He actually is the director for the nation for Velocity Commercial Capital.
Oh, I knew that.
And they do all the, your apartments. Their commercial side is very busy, but he's headed up the 1 to 4 division, which is just booming.
Right.
They're doing fantastic.
Excellent. Maggie, thank you very much for coming on the show once again.
You're welcome.
And I really appreciate it. We'll have you back for an update probably in a couple of months just to give us, the scenario, what's going on in North Carolina, and certainly your experience with California loans. Thanks very much.
You're very welcome.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Well, welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. Telephone number, info@malibufunding.net. That's our email address. I want to say hey to everybody out at KCAA, KMET, and K-Tahoe, our great affiliates around the state of California who actually make this show what it is. I mean, the audience, the people that listen, the calls that I get, the emails, really appreciate it. Without them, I couldn't do it. So thank you, one and all, to everybody who's Bill and Fred and certainly Daryl. Thank you very much for all the help that you give me putting the show on each and every week. We're on YouTube, as everyone knows. If you go to YouTube, my channel is Jeff Barton, the real estate voice. And when you plug that in, you'll see this show as well as many other shows that have been on the air in the past, as well as the Las Vegas Real Estate Show, which has been on hiatus. We're about ready to start production on our game show, which is a very exciting idea. But aside from all that, we brought Thomas Trujillo back on from Lone Stream. He's the account executive over there to talk to us about this exciting lower interest rate market and what's happening in business and his business in particular. Tomas, how are you?
Hey, Jeff, I'm doing great. How are you doing, buddy?
Me, I'm fine. Thank you very much. I'm actually kind of stressed. This market, when they lower rates, the business picks up, and it adds stress. I mean, I appreciate it. It could be worse, right? It could be no business, and then you have a different kind of stress. How are you dealing with it? What's happening at Lone Stream?
You know what? You and I have been in this business for so long. We've learned how to ride up and down, and right now we're riding up.
Yep.
Our FHA rates are killing it right now. I think they'll be killing it for a little while longer. But I still try not to look at that because there's a million lenders out there doing FHA.
Right.
We have the Cal HAFA, which makes it a little different, but we can do the Cal HAFA, which is we'll give you the down payment and we'll give you money for closing costs.
Okay.
Which is great.
Yep. Tell me about that for a second, will you? Let's slow down. Okay, so down payment assistance programs, Cal HAFA. The process, that's actually two different loans you're getting, right? One Cal HAFA and one with you guys at Lone Stream.
That's actually three different loans you're getting.
Okay.
You're getting the regular FHA loan with us.
Yep.
Then we're doing the My Home down payment assistance program where we give you 3.5% of your loan amount as your down payment.
Okay.
Then we're giving you a third loan, a ZIP, zero interest program where there's no interest rate. We give you 3% for your closing costs.
Wow. How long does this take?
The whole process from beginning to end?
Yep.
We've done it as quick as 3 weeks.
Wow. Wow,
it's a great program. How could you go wrong with no money out of your pocket?
You can't go wrong. What is the skin in the game for the borrower?
Home ownership.
Home ownership.
It's home ownership. Right. And we saw your credit. We see you qualify. You're not making $1 million, but we don't want you to make $1 million. This is for the guy who can't afford it.
Right. No, this is a great program.
Pardon me?
I said this is a great program.
Oh, absolutely. It's one of our best. I like doing. I'm more of a niche lender. I like doing my niche stuff.
Yep.
That nobody else does. I got this. I got my bank statement program. I do I-10 loans now. We're phenomenal at I-10 loans.
Tell us about that program. Give us an example of what you're talking about.
Usually when you come to the country and you're not a permanent resident alien yet, but you want to do it right, the IRS will send you a letter giving you an I-10 number so you can file taxes. So typically, people who have a fake social to begin with, they don't file taxes under that fake social. They'll use their I-10 number. So when you apply for an I-10 loan with me, I'll give you up to 85%. 5% of the money has to be yours. The rest can be gift. I will ask you for either 1040s
Yep.
or W-2s or bank statements, wherever you have your money going into under the I-10 number.
So the I-10 number is really a corporate number, right? Isn't that what it is?
Yeah, well, it's what the IRS gives you to file your taxes.
Okay, and if you're a non-citizen without a Social Security number, this is the only way by which you can qualify for a loan under this program. Sounds doable for most people who are here.
Oh, we've been doing a whole lot of them lately.
And where are your customers from? Are they mostly Southern California based, Inland Empire, Riverside, San Bernardino? Where are they coming from?
All the above.
Okay.
We have Bakersfield, Inland Empire,
Right.
Vegas. We're doing them all over the country.
Yeah, and the security, of course, is the property itself, and we have an ascending real estate market. What do you think about the real estate market currently? Do you see it continuing to raise? Maybe not at a pace it was last year, but something along 3-4%.
I think it's still growing. I think it's crawling. It's not sprinting like it was, but it's crawling. We're still in the market. We're still looking good. I don't think we're in for anything major yet, but we keep our fingers crossed and keep on chugging along.
Now, to do these loans, you obviously have a feeling at the company, at LoanStream, that the economy is going to do pretty well. We're not seeing any, red flashing lights or some kind of problems on the horizon, which would, put in jeopardy a home which is 100% financed.
Absolutely. I mean, we rely a lot on our partners. Malibu Funding, they do a great job.
Right.
Well, you do a great job of pre-screening the client for us. We know what we're getting into. We trust you. We've done so many loans with you. You're a valued partner. Right. So a lot of what we do is based on what you do.
Right. Right. And in terms of that, in the origination process, the upfront, the client interaction, all of that brings to the table a lot of, different kinds of borrowers. So in terms of the vetting process and how you guys approve your loans, what is the underwriting process like, and what are some of the typical requirements beyond just your taxes that you might ask for?
Well, we're just going to look at your credit for how deep is your credit. Do you have credit? If you don't have credit, then we'll take alternative credit. I'll use your car insurance. I'll use your rent. I'll use your cell phone bill. I'll use your utility bills to build credit. Basically, I'm looking at the character. How long have you been in the country? How long have you been working? Have you had steady jobs? It's a whole credit profile. I just want to see what kind of person you are.
I see. And in giving the answers to some of that, you're obviously eliminating some but accepting most, right?
Yes, absolutely. We try to make every loan work. If it's not working one way, then we'll try to make it work a different way.
And you guys, LoanStream has been around for some time, right? I mean, when did the company get established?
I was the first AE hired, and that was about 4 years ago. Prior to me, they were around doing some correspondent and retail for about 7 years.
Right.
So, yeah, they've been around for a while, and our team specialized in this back before the whole mortgage meltdown.
Right.
So we kind of have our old hedge fund, so we kind of know what we're doing, we know what we're looking for.
That's interesting. So your money is not typically borrowed from a larger bank or the federal government. It's borrowed from private sources, which makes...
Oh, absolutely. That's why we can be so flexible in our loan programs.
Now, most of these loans, they're held in-house, or do you end up bundling them all together and selling them off somewhere?
Typically, we'll sell them off to the hedge fund.
Yeah, exactly. And a lot of these hedge funds are very hungry for loans, which is why the programs have opened up for these types of borrowers, making it easier for someone who wants to buy a house, who not necessarily is the W-2, 20% down, Social Security tax person to be able to get a loan, which is obviously there's a large market for that here in Southern California.
Absolutely. That's why I typically like to look for the niche guy, because that guy can go to Wells Fargo and doesn't need me, doesn't need any of us.
That's right. That's right. No, that's absolutely right. And the type of loans that we're talking about are good loans. And it's not like we're people always say that person shouldn't buy a house or that person couldn't qualify. It's not like that. You are looking at these borrowers individually as opposed to churning loans in order to get fees.
Correct. We're not doing as many as we used to, but we're still doing a good number, and our client is just better qualified.
Yeah, there's better. What's the average FICO score of most of these clients anyway?
You know, Jeff, I couldn't give you an average. They're ranging everywhere from 600 to 780.
I see. Yeah, no, I knew that the average U.S. borrower is still above 700 FICO score, which is pretty good, but that doesn't mean that this particular niche or that particular program qualifies for that type of statement. But most of the programs require certain things from the borrower. Tell me, what's the biggest obstacle for people getting a loan with LoanStream?
The biggest obstacle, I would think, I think it would be right now would be time.
I see.
We get inundated near the end of the month, and so we just start falling back on our turn time. We would be typically 12 hours. Now we're maybe at 48 hours.
Wow. That means you're doing well, and that means the borrowers that you are servicing are getting a great deal. Tomas, thanks very much for coming on the show.
Thanks, Jeff.
Thank you very much. I really appreciate it. That's Tomas Trujillo from LoanStream. Hey, Tomas, you still there?
I'm here, buddy.
Shout out your phone number, will you, so people can get a hold of you by phone by listening to the radio?
323-228-5181.
Excellent. Thank you very, very much.
Thank you, Jeff.
And I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Save the number, write it down, call us with questions. We have answers, lots of them, especially if you've got a problem. Let's say you're in a contract right now, okay? You got your realtor, you got your house, you're in a contract, but your mortgage broker can't perform. Has it happened to anybody out there? I can ask every seller in the marketplace who has already been through this process, and they'll say, yep, happens all the time. Now, why is that? Why does a contract get opened without financing secured? It's because, one, the seller's agent doesn't know to ask enough questions. Two, the seller is anxious because there hasn't been any movement on the property, so the agent gets them into a contract without making sure that the buyer and the buyer's financing is in place. That's a problem, and the only way to really fix that is to make sure that your particular agent that you have, your listing agent, the one you're listing the property, yes, they can dress the house. Yes, they can make sure that the inspection goes right. Yes, they can negotiate contracts. But unless they know the financing, there is no chance that you can be assured that the buyer is qualified. Now, if you are out there and you're a seller and you're listening to this and you've been through the process and you know what? That guy's right. I've been through this. I went down to the wire, 30 days, 45-day escrow. The buyer couldn't perform. We gave him an extension. The buyer couldn't perform. Now it's October when we were supposed to sell this in August. Now, we all know that buyers fall off the map once kids go back to school and we get into the fall time, especially around Thanksgiving or Christmas. You can just kiss that goodbye. So here's what you do if you're a seller. If you want to make sure that your agent knows what they're doing, before you hire them, ask them some simple questions. Ask them, what would you consider is the most important question to ask the buyer to find out if they're qualified? So what's the answer? Okay, there are several answers you can have there. How much money do you make? What's your FICO score? Did you have a loan before? All of these things are just simple questions. But if your agent doesn't know the answer or doesn't know enough to ask those particular questions of the buyer's agent, then how are you going to be assured that they're protecting you when you sell your property? That's a problem. Everybody who is in the marketplace wants to tie up your property. Why? I do a lot of business in other states. I'm currently in New York State doing some work for a guy who's flipping houses. Do the same thing in Las Vegas, Nevada. Texas as well. And we've done some of that work in Florida. Not as much in California because the prices are too high for me. But what's the one thing that is between buying and selling, buying and flipping, and buying and holding? There's a thing called wholesaling. A lot of people do that, especially with uneducated seller's agents. And what do I mean by that? Okay, so if I can get your property and negotiate it to the best price possible, and there's any room in the property at all in terms of equity that I see as an agent, I can wholesale that property and flip the contract. So the most important thing for me to do is to tie up the property so I have time to be able to do that. Now, in most residential clauses or most residential contracts written by Carr, flipping or wholesaling is not allowed. But in those of you out there who do not use agents, who think that you can do it on your own, for sale by owner, you just want to have the buyer have an agent, you want to do it all on your own, you have to make sure that your particular way of looking at that contract includes making sure that they cannot wholesale this property, because that ties it up. So tying up the property is a big deal. It's a big deal when you're flipping. It's a big deal when you're wholesaling. And so having control of that property is the absolute worst thing you can do if you're a seller. In California, they have a lot of ways to protect the seller, which I think is a good thing. You have an asset. You don't want it tied up unrealistically. The buyer, they want to come in. They want to, buy the house in 30 days. They're saying they can get a loan. Fine. Prove to me you can get a loan. How much money do you make? What's your credit score? Have you had a loan before? Can you tell me where you're sending your loan? What kind of loan is it? Is it an FHA? I'm involved in a loan right now with a client. The listing agent did not know this was a DPA, a down payment assistance program. CalHAFA, they call it. It's a great program, but it means that it's going to take time. The listing agent calls and yells and is angry about it, but at the time of the contract, knowing the financing in and out is extremely important. Because if you didn't know that and you want to issue a notice to perform, or you want to issue other disclosure requirements, especially about the financing, you better make darn sure that you're aware of what those programs are. CalHAFA is a down payment assistance program. It's given by the state of California. There are county programs, down payment assistance programs. It means you're getting two loans, not one. You're getting one through the state or the county or both, and you're getting one from the lender. Now, there are a lot of lenders that have requirements when you do a down payment assistance program that they don't have if you're putting 20% down, right? It makes sense. You don't have as much skin in the game. So in order to provide the information, they're going to ask for more. And asking for more is going to take time. Look, if all you're giving it to a lender are your W-2s and your FICO score, maybe some other disclosures, that's pretty much a slam dunk deal, especially if you have 20% down. That means that you are guaranteed you're going to be able to repay that loan because you're a W-2 for 2 years. You can provide them with your tax returns. This is an easy loan. But a down payment assistance program where you have to get the state or the county or both to approve you, plus you have to get the lender to approve you, and it all has to mesh synchronistically, you really need more than that. You need more time than that. I would say right now, 45 days. And in a market like you have now, where you probably have multiple offers being submitted on most of your listings, unless, of course, you've got it overpriced, which happens all the time, too. But you, as the seller, you're out there, you're thinking, okay, does my agent know enough about loans to be able to give me the expert advice that they need? I know that there are many lenders out there who will not allow cross-qualification, i.e., if you're a seller and you have a mortgage broker, or your agent has a mortgage broker or a lender that they want to use because they can trust that lender. The buyer is going to come in with their own lender. So a lot of contracts call for making sure that the borrower, the buyer, is cross-qualified with the seller's agent or the seller's mortgage broker. Now, if I'm the agent for the buyer, I say, no way. I'm not going to give you access to my, what are you kidding me? This is a business for me. I'm just not going to hand you over. What I will do is tell you what the FICO score is. I'll give you the program that we're going to use, and I even can get you a underwriter approval through DU, a DU underwriter approval. But to hand you over a file so that you can look at it and then maybe go around me and try to snake my client, that's not going to happen, because everybody knows most real estate agents have their own mortgage broker or mortgage agent. So all of these things to consider when you're a seller are extremely important before you sign the contract. You have to know about the financing, you have to know whether the client is qualified, and you have to know whether your agent is qualified to be able to judge what information they're getting from the buyer's agent in order to make sure that you're getting into a contract. Because once you get in that contract, it's a hassle to get out of it. Let's say you issue a notice to perform, they don't contact you back. Now what do? You issue a cancellation. They don't contact you back. Now what do? So you've canceled the property, but escrow will not cancel the escrow because you don't have signed instructions by buyer and seller. Now what do? That's why it's extremely important to be able to make sure that your agent knows what they're doing with the financing, and you know how to make sure that they do by knowing the correct questions to ask. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening to the show. We're here each and every week. Call that telephone number. I'll be there. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.